In 2024, SpaceX is valued at over $180 billion. Investment banks have offered to take it public for years. Elon Musk has refused every time. This isn't stubbornness. It's the decision that keeps SpaceX from becoming another Boeing. Wall Street doesn't understand the refusal. A public offering would unlock tens of billions in liquidity, reward early employees, and give the company access to unlimited capital. But Musk has called going public a death sentence for long-term innovation. By 2023, SpaceX had launched more orbital mass than every other country and company on Earth combined. It controlled two-thirds of the global commercial launch market. Starlink had over 2 million subscribers. The company was printing money. Its Falcon 9 had become the most reliable rocket in history, with over 200 consecutive successful missions. NASA, the Pentagon, and commercial clients had no alternative. SpaceX wasn't just winning the launch market, it had become the market. But beneath that dominance, pressure was building. Early investors wanted liquidity. Employees held stock options worth millions on paper but couldn't sell. Competitors were going public, raising billions. And Starship, Musk's bet on Mars, was burning cash with no revenue in sight. Starship had consumed over $2 billion in development by 2024, with no paying customers. It had exploded on the pad, broken apart in flight, and required a complete redesign of its launch infrastructure. Public investors would have demanded answers. Investment banks approached SpaceX repeatedly between 2020 and 2023. The pitch was compelling. An IPO could raise $20 billion or more at peak valuations. It would make early employees wealthy overnight and give SpaceX a currency for acquisitions. SpaceX had other options. It could remain private and raise capital through tender offers, allowing employees to sell shares to private investors. It could spin off Starlink as a separate public company, or it could accept the constraints and slow down. Musk controlled the voting shares. President Gwynne Shotwell managed operations but deferred to Musk on capital structure. The board included early investors like Steve Jurvetson and Founders Fund, but Musk had final say, and he had watched Tesla go public a decade earlier. In 2020, and again in 2022, and again in 2024, Musk said no. SpaceX would remain private. It would raise capital through private funding rounds at valuations it controlled. Employees could sell shares in periodic tender offers. But no IPO. The logic was straightforward. Public companies report earnings every 90 days. Analysts demand predictable growth. Shareholders sue over missed guidance. Long-term bets, like reusable rockets or Mars missions, get killed in favor of quarterly revenue. Musk had seen it destroy innovation at other aerospace firms. Boeing had gone public decades earlier. By 2020, it was optimized for shareholder returns, not engineering. It outsourced critical systems, cut R&D spending, and bought back stock. When the 737 MAX crashed twice, the cost-cutting was cited as a contributing factor. Musk had taken Tesla public in 2010. He later called it one of his worst decisions. Quarterly earnings calls distracted from product development. Short sellers attacked the stock during production hell. He tried to take Tesla private in 2018 and failed. He wouldn't repeat that mistake. The immediate consequence was relief. SpaceX avoided the regulatory burden of Sarbanes-Oxley compliance, the cost of quarterly audits, and the distraction of investor relations. It could plan in 5-year increments, not 90-day windows, but it had also locked employees into illiquid equity. Employees complained. Stock options were worth millions on paper, but they couldn't pay mortgages with paper. SpaceX responded with tender offers every 6 months, allowing employees to sell up to 20% of their vested shares to private buyers. It wasn't perfect, but it worked. But staying private had costs. SpaceX couldn't use stock as acquisition currency. It couldn't raise capital as quickly as public competitors during market booms. And it had to keep convincing private investors to fund Starship, a rocket with no clear business case beyond Musk's Mars ambitions. A public SpaceX would have faced brutal quarterly scrutiny. Analysts would have demanded Starship revenue projections. When test flights exploded, the stock would have crashed. The FAA delays in 2023 would have triggered shareholder lawsuits. Innovation would have slowed to manage expectations. Boeing's market cap peaked in 2019 at over $200 billion. By 2024, it had lost half its value. The company that invented modern commercial aviation was now bleeding cash, cutting engineers, and losing contracts to SpaceX. Public market pressure had optimized it to death. Public aerospace companies face a paradox. Investors demand growth, but aerospace development takes decades. Lockheed, Northrop, Boeing all became risk-averse, focused on cost-plus government contracts with guaranteed margins. True innovation, the kind that fails 90 times before it works, became impossible. Blue Origin remained private under Bezos. Rocket Lab went public in 2021 via SPAC and immediately faced pressure to show profits. Its stock fell 70%. Virgin Galactic went public and burned through cash while delaying flights. The market punished long-term thinking. By October 2024, Starship had completed 5 test flights. The 5th successfully caught the booster with mechanical arms, a breakthrough that would have seemed insane to public market analysts. No public company would have funded it. SpaceX could afford to look crazy. Public markets reward predictability. Amazon spent 2 decades investing profits into growth before Wall Street accepted it. Tesla nearly went bankrupt while scaling production. SpaceX's Starship program, burning billions with no revenue, would have been killed by activist investors within 2 quarters. Musk has said publicly he wishes Tesla had stayed private longer. During Model 3 production in 2017 and 2018, short sellers and quarterly pressure nearly destroyed the company. He slept on the factory floor to meet deadlines Wall Street demanded. He won't let that happen to SpaceX. As of late 2024, SpaceX is valued at $180 billion in private markets. It launches more than all competitors combined. Starlink is profitable. Starship is progressing, and it answers to no quarterly earnings call. The decision to stay private is renewed every year. Staying private hasn't destroyed SpaceX. It has insulated it from the short-term thinking that has hollowed out every other major American aerospace company. The decision costs liquidity and limits capital flexibility, but it preserves the ability to fail, iterate, and build for decades, not quarters. SpaceX has not announced plans to go public. Musk has stated he won't take the company public until after regular Mars missions begin, a timeline measured in decades, not years. The company continues private funding rounds and employee tender offers. The decision stands. If Starship succeeds, it will be because SpaceX could afford a decade of expensive failures without explaining them to analysts. If it fails, the company will have burned billions on a dream no public board would have approved. Either way, the decision to stay private made the attempt possible. The lesson isn't that going public is always wrong. It's that capital structure is strategy. Public markets are tools optimized for certain goals: liquidity, growth capital, acquisition currency, but they demand quarterly performance. For companies building decade-long bets, that demand can be fatal. Choose your constraints carefully.